Hey, Zach and Jesse, can you hear me?
Yes.
Hi, guys.
Can you hear us?
Oh, fantastic. Zach, I met you in the Atlanta Hybrid Noir talk a few weeks ago. That was pretty good.
Oh, great. Good to see you.
Yeah. And I'm retired because of Tesla 3 weeks ago.
Wow, congratulations.
Congratulations. That's amazing. Well, we're going to definitely want to talk to you some more. I bet a bunch of you watching are going to want to talk to you some more.
Yeah, and I had not sold a single Tesla stock. That's a beauty.
Nice, exactly. Yeah, we're going to
I sold everything else. I sold everything else that was junk.
Clean it all out. Hold on to the good stuff. I love that. That's great.
Good afternoon, guys.
Hey, welcome.
Hi.
How you doing?
Good. Hey, I watched In Depth last night, and I don't know about everybody else on this call, Jesse, but I'm just as excited as you were. I don't know if you were just punching it up for entertainment purposes or if you're really that way, but I'm exactly psyched up like that.
Yeah.
So somebody actually, I don't know if you saw this. I think it was on Teslarati. Somebody pointed out that there was some etching on that picture that they said it's 54 millimeters in diameter. So that means the capacity might be even higher than what you figured out by measuring your thumbnail.
We actually think we might know exactly.
We've gotten someone who will remain nameless, who basically kind of said we were very close. It was what was it? It was
4576, but it turns out to be 41.
yeah. So I mean, my thumb isn't exactly the same size as that guy, apparently.
Zach, your mic's not working anymore for some reason.
Your mic is not working, Zach.
Sorry, we have a really convoluted system. Obviously.
You're just getting started at this, so you know.
Let's see. How are we doing? Can you?
You guys hear me now?
Still can't hear him.
Check 1, 2.
That works.
Can you hear me now? Okay.
Yep.
That worked.
We're all figuring this out together. All right. That's good.
Awesome. Thank you, guys. That's good feedback.
Much better.
Wow, we got a lot of people.
We have a
on the call.
lot of people.
That's
Wow.
awesome.
This is great. All right.
All right, well, the first thing I'd like to do is just let you guys know that we're going to be here for about an hour, so settle in, get some popcorn, whatever, get some drinks. And then I'd like to just do I think you can do kind of a poll, right? Or a show of hands. How are you going to do it?
Yeah, so I believe if everyone goes to their participants section of Zoom, there should be a thumbs up, thumbs down, or like a yes, no. Oh, it's a yes, no, isn't it?
Okay.
So I kind of want to see, so like just everyone click yes if you can do it.
Oh, good.
This is good. This is good. So we're at about half. And, you know, if you don't want to participate, that's fine. You could even hit no if you didn't want to participate, because that'll just kind of give us the number. So that way, if we do decide that we want to do like a poll and you can, voice your opinion, then we can kind of, tell roughly how many people are agreeing or not agreeing or whatnot.
Right. Yeah, because I'm going to be asking you guys basically because I want to kind of feel out the club. I feel like this is a real investor club here, and I want to get a sense of how many people here are experienced, how many people are new.
Right.
There's no bad or good answer. I just kind of want to get a feeling for it.
Right.
So I guess the first question would be...
But before the first question, we have to make sure that we can get rid of the yeses.
Oh, yeah.
So everyone click yes again to make it disappear. Hopefully we end up at 0. And so...
No, I can't.
Jack, you may want to move your mic a little bit closer to your mouth because we can hear you now, but you're kind of quiet.
Okie dokie. Thank you, dude.
Yep.
All right, so we're down to
at
2
your
yeses.
end, I believe you can clear the hands as well. At your end as the host.
Oh.
Clear the board as well.
Nice.
Let's see how I do that.
Clear it out there, dude.
Oh, clear all.
Clear all.
Wow. Hey.
Nice.
We're already learning stuff.
All
That's
right.
great. Okay, so now you don't have to. We don't have to be as responsible.
Right.
Okay, so let's start off.
Yes, my first question would be, how many here have never invested before? So you've never bought a stock, you're really interested, but you've never bought a stock before.
So yes, I've never bought a stock. No, I have bought a stock.
Yeah, or just yes, I've never bought a stock. I just want to kind of get a sense of how many of you are complete newbies, which is totally fine, but just so we know. Okay. Okay, so a handful have never bought a stock before. A couple, that's great. How many of you would consider yourself that you bought one or two stocks before, but it's not a regular occurrence for you? You're pretty new at this, but you do know you have a brokerage account. You have bought one or two stocks before. Okay. All right. Cool. And next would be your intermediate. You've bought some stocks before, once in a while. You don't consider yourself an expert by any means, but you know how to get around things. You know how to buy things. You're an intermediate investor. Okay. Alrighty. And then lastly, you're an advanced investor. You can do options. Maybe you're an angel investor. You're going to give me the answers today. Really? No one here has done like options trading.
All right, so we'll lower it down to options. Any
yeah, so-
options trading?
Okay, so a few people have done some options trading. Okay, cool. Cool, excellent. This gives me a really good idea of who's in the meeting and what you guys have. And let me just do this for a second. I just want to check out who's here. Awesome. All right, so I was thinking I'd give you just a little bit of background on myself first, and I will also just want to give a clarification that we are not financial advisors, so don't take our advice today. We are not telling you what stocks to buy, anything like that. A financial advisor would sit down with you and actually go through, first of all, they'd be certified and licensed, and then they would go through your individual needs, and they would actually know, what your risk factor is, all sorts of things. So don't just be like, as soon as I get off this call, I'm going to go buy some more Tesla. That's not the point of this call. We're happy to talk about stocks and talk about what we would do. I just want you to make sure that you're not going to take that advice and just go run with that without doing your own research. So I got it started in stocks back when I was 13. I worked at a hardware store, and my boss, Peter, was always sitting there with a newspaper open, and I was like, one day I was like, what are you doing?
Now, I want to preface this. You didn't start working at the hardware store when you were 13.
No, I started when I was 5. I got up the courage to ask him about this, years and years later when I was like 13. So I said, what are you doing? Oh, I'm looking at the stock pages. And I got very curious about this because there's just tons of numbers and data, whatever. And I had him start to teach me what all this gibberish was. And it really was gibberish back then, because they had to squeeze it all in. So it was fine print, and each stock had, its high, low, and that kind of stuff. And then I slowly was trying to figure out, okay, so why are you looking at all this stuff? What does this mean? And he started explaining that it's the stock market and what stocks were. And so that was really just eye-opening to me, because my parents never invested in the stock market. I don't think they even knew what it was. And so I felt like I had this information over them. I was coming home every day with I know something you don't. And so I remember saying to him well, I want to do this. I want to start trading. And he was like, okay, slow down there, buddy. Let's do some paper trading. So pick a stock that you think is, pretty cool, and let's put some fake money into an account and let's pretend to trade it. And so I remember the first stock I invested in went bankrupt about 6 months after I invested in it. So I'm like, I don't know if I learned that much. I think it was Baldwin Pianos. I don't know if you guys remember that company, but because I knew what the company did, that was pretty exciting. And also I think they had a really high dividend at the time, which I've since learned can be a bad sign. So after I did that, he was kind of like, well, that's good. You got that out of your system. Probably you can start to invest. And so I think when I was 13, 14 years old, Merrill Lynch offered the Share Builder account. I think it was called the Blueprint account. It allowed you to invest tiny amounts of money. I think my first investment was $25 or $50. And so you could buy fractional shares. I don't know how they did that back then. I think the brokerage themselves owned lots of shares, and they would just break them into pieces for their clients. So I bought AT&T. That was one of my first stocks. And I remember shortly after buying it, it broke up into the individual, 9X, Bell South, Bell Atlantic, and so forth. And I remember being just blown away by this concept that one corporation could then be, broken into smaller ones. And actually, if I had invested, say, $10,000 in AT&T, that would have been an awesome investment, because each of those regional phone companies went on to do quite well. Today, for instance, our local one was Verizon, then it became nationwide. It used to be 9X. And so that was kind of eye-opening to me that, these companies can grow that much. And unfortunately, as a kid, I didn't have that much money. So my beginning investments was just, we're talking low thousands figures. But it really was eye-opening because I think doing this is actually the way to learn it. And so I guess my first thought would be to you guys out there who are newbies or haven't done this before, you might want to start doing some paper trading if you haven't already, and to go to sites like Investopedia. They have a really cool thing there where you can start off with, I think it's $100,000 of fake money. There's actually competitions on there, so you can take that $100,000 and start to invest it and see how you do relative to other people. And you can start to get emotionally invested, because part of the problem with investing is it's very emotional. For those of you in the club who are investing in stocks, tell me if this is true by a show of hands. You invest in a stock and then you start watching it every day, right? You're on your app or whatever, or you're on screen and you're just like, oh my God, it went up 20 today. Oh my God, it went down 20 today, right? And you're just riding an emotional roller coaster of watching the stock go up and down. So is that true to some of you guys? Yeah, I'm seeing a lot of emotional.
Yeah.
To me, investing, a lot of the problems with investing is the emotional side of it. I think we all hope to get to the Warren Buffett plateau where we're not emotional anymore, where we've taken that emotion out of it. But in the beginning, it's super exciting and emotional. And when when the stock's going down, you're just like, oh my God, I've lost X amount of money. What should I do? And you start making decisions based on an emotion. And so that's one of the reasons I wanted to set up the Investor Club. I feel like when you're in a club with other people and you can share your thoughts, you can share your questions. Zach and Jesse, Tesla's gone down. Should we sell it? It's great to have a bunch of people be like, no, we think it's fine. Everything's good. Don't worry. We're just riding it out.
Right.
And so, yeah, that's kind of what I want to be here for. I want to have a section of this club every week or every month when we do it, so that you guys can just ask questions, say how you're feeling, so that we can all just kind of get over any of the humps in the market that there might be. So then I went on to in the 90s, early 90s, when Jesse was born, I started being like, well, this is fine and all, but I want to make some serious money. So how can we make serious money? And one of my friends was into investing in penny stocks. So I've gone through that period of my life where I was like, let's just make quick money, right? Let's buy these cheap stocks and make money. And not that you can't make money in cheap stocks, you can. But a penny stock is a penny stock for a reason, right? It's super cheap because there's a huge amount of risk involved. A lot of these penny stocks can just disappear, and so you can lose everything. And so you're hoping that the stock you bought for 41 cents is going to go to $4. And it can happen. We've seen that happen with I'd say Arcimoto was penny stockish for a while there.
Well, definitely dropped below $1 for a while.
Right.
Yep.
And there's plenty of mine stocks and things like that we can talk about that you get into. But I did learn how risky that was. I remember I invested in, I think, a home builder called Calton, and they were, ultra cheap, and then they just disappeared. And I was doing this with an older friend of mine who was kind of showing me the ropes. And I remember I put quite a sizable chunk of investment in it and kind of relying on it, which is something we shouldn't do. And, I think it was like $2,000 and I was hoping it would go to, 10,000 or something. And I remember being just devastated when it pretty much went bust. And because I was doing something you should not do. You should not be taking money that you need for something and putting it into a stock, hoping that, in 4 months you'll be able to buy a car with it. It's generally not going to work in your favor if you're doing that. So that's another thing we should be talking about, is what your time frame is. I want to kind of find out from you guys, is money you're investing for the long term? Is it something you're just, hoping in 2 years you're going to be able to get something out of it? I'm generally a long-term investor. I think you are too. I usually want to have at least a 3-year time frame on anything I invest in, because I found that the longer your time frame, the more likely you're going to see that result. But it's been pretty exciting with Tesla lately, right? Because we had a long time frame on it, but we've gotten to such a big growth stage here that I bet a lot of you are probably asking, should I cash out some of this?
Right.
I know my dad did. I finally convinced him to buy some Tesla stock. He bought in at I think around 200, 220, something like that.
Right.
And he was basically saved up on earned enough to buy a Tesla. I don't know if he's gonna do that yet, but he sold a bunch, and I was like, oh, Dad, you should have held it for longer. But he was like, you know what? Life is short. I want to enjoy some of it. I'm gonna have an awesome trip to Europe next year, if there is a Europe vacation next year. And so, he cashed out some of it. And so that's perfectly viable too. If you go up 10x on an investment, don't get too greedy. Like that's
Right.
pretty amazing.
Right.
So we'll be talking about that too. So now what I've gotten to is I'm also doing angel investing, and we can talk about that too. Angel investing is when you're an early investor in a company. Until I got to know about Jason Calacanis and what he's doing with angel investing, I had heard about it. I knew that people were doing it, but I didn't know how to do it. I was like, how do you get to invest early in a company? How do I get to rub elbows with these people?
And so by that, you don't mean like one of those penny stocks where they're already on the open market. This is a private company. So you're investing in private companies that you usually don't have access to investing.
Right. And that's kind of what I wanted to be doing with penny stocks. I thought I was doing back then. I thought like, that's what I'm doing, right? I'm investing in these tiny companies. But if they've already gotten to a market, if they're already on an exchange, they're usually pretty big at that point. They're usually at least, $10 million company. I'm talking about companies that are probably, sub $1 million companies. Some of them are just basically shoestring idea just out of the garage. And so if you can angel invest in a company at that level, let's just talk about one of the companies that that Jason Calacanis' group has invested in, Uber. So they were an angel investor in Uber. If you happen to be with him on that trade, you're doing quite well because that's over 100x. But many of these companies disappear. They're just largely ideas with a founder who has, an awesome idea, but probably not a lot of business background. And so a lot of them go bye-bye. And so angel investing, again, is not for the faint of heart. It's not for someone who needs that money right away. This is money that you are not expecting to see any return on because most of it will disappear. Probably 7 to 9 of those out of 10 are going to disappear. 2, 3, 1 are going to go on to be something big, and maybe something will be super big. And so it's kind of fun. I'll talk about one company in particular. We interviewed the CEO and founder of Dexter, which is a online learning company. And I was basically I learned about him and got to interview him because I was an early angel investor in the company. And when I heard him do his pitch, these guys have to go out and do like 3-minute investor pitches all the time. When I heard his 3-minute pitch, I signed up. I know that's probably not a good idea. You probably should do some more research, but I just felt something. I felt a connection to this guy. You kind of felt it too when we talked to him.
Yeah, and I mean, I'm glad that we had a longer interview with him as well. Very intelligent person, really knew what he was talking about. Really saw the flaws in education and that sort of thing. I mean, and flaws in education is something that I've experienced firsthand. Where if you're not a goody two shoes kind of student, you don't get the full effect of an education. And so, yeah, I mean, that's a good example of a company where they have this idea of doing an online learning platform. And it's like, okay, great. That sounds great. Online learning platform. Okay. So what, right? I can say online learning platform. That's not a company. It takes, the idea, a good business model, and a bunch of other stuff that we're going to discuss. And you have to turn that into a business.
And I'll be honest, like when I was investing in Dexter, I didn't necessarily think that they would succeed based just on their business model. I just loved the idea so much. I wanted to kind of get behind it.
And this was before COVID, which was pretty good forethought on our part. It just seemed like, I don't know, to me, it just seemed like, of course, we're going to have online learning at some point, without knowing that literally the next year was going to be online learning for a lot of people.
Right. And the other cool part about being an angel investor is you can actually call up the CEO. So once you're, angel investing in a company, they just generally want to make you happy. So if you email them and say, hey, I'd like to get on a call with you, or I'd like to, chat, they're basically going to carve out some time for you because you're an early investor in their company. They know that you can turn on the spigot for more money later. You can talk it up with your friends. And so you're getting to talk to the management team of a company. You might want to have some questions about, how's the company doing, so that you can further decide how much more money to put in. Or B, you might want to talk about, whatever they're doing. So for instance, we want to talk to them about education, or if they're a battery company, you might want to talk to them about like, hey, I want some insights into what's going on in this world. It's really cool because it gives you a feeling that you're more than just a quiet shareholder. You're actually there at the beginning of the company. So that's pretty cool. Some of the other things I've done with investing over the years, I was really into stock charts for a while. I mean, I still am, but like I used to trade just on charts. Again, that's probably not a good idea. I used to, look for patterns and so forth, which is, show of hands, how many people here look at stock charts kind of religiously, like try and dissect what's going on with the charts? Anybody here? No? Okay. Interesting. Yeah. So, I mean, I
You
used
got to give it a couple more seconds to see what people think.
But yeah, it doesn't seem like too many people. There's one. Okay. Yeah. So charts to me, there's a lot you can learn from charts, but I used to think, oh, I've hit the jackpot. I figured out what no one else has figured out, right? That the charts will tell you everything. They don't tell you everything on their own, but they are pretty cool when used in conjunction with other things. And then I went on to do value investing. I was pretty into that for like the beginning of the 2000s. Value investing is basically where you try and find a company that is undervalued. Think of it this way: you guys know the prices of things pretty well in parts of your life that you are. So, for instance, if you're into auto parts and you go into an auto parts store one day and you see that spark plugs are half the price they normally are, you might stock up on some spark plugs because you're like, hey, I know I'm going to need them for my ice car, and they're wicked cheap today. Why are they so cheap today? Who knows? The market might have overproduced. They might be on sale, but you know that the inherent value of that spark plug is, say $4, but they're selling for $2. Same thing with the company. You might be watching a company for a while and you're like, wow, I really think this company is undervalued by the market. Why? Who knows? The market might just be down on a certain technology right now. All tech stocks are down, that kind of thing. And you're like, well, but I know that this one is undervalued, so I'm going to buy it. So I was into value stock trading for a while. There's nothing wrong with that. The problem is it is kind of boring. We're talking about gains of probably 50%, 2x over 2 or 3 years. And once I started to learn about disruptive companies, I was like, oh, we can do better than that. Let's put our energy into that. So going back to Tesla, a disruptive technology company, you've seen the kind of gains you can get out of that. But I will point out that Tesla looked kind of boring for a while, right? It was kind of flat or even heading down for a while.
Boring that's one way to call it. But I mean, yeah, it certainly didn't seem like, you didn't see a lot of upward momentum is probably what you mean by that. Like the stock wasn't going through the roof like it is now. Now, of course, it's very exciting. I remember back in January, February, it was February, right, when the stock popped originally up past 1,000.
Yes.
Yeah, I hear from all my friends, oh, I want to buy Tesla. Okay, you should have bought Tesla when it was at 300. Why are you buying it at $900 a share? In the end, it turns out to be pretty okay for them. But there was quite a while there where they were then asking me, oh, the stock went down, should I sell it? And I'm like, just because it's at 700 doesn't mean anything. Like, don't worry. So, yeah, and we should probably outline what a disruptive company is.
Yeah.
And Tesla is a perfect example, of course.
Right.
It's where you have a lagging industry. It's where you have some industry that hasn't been keeping up with technology. There's some aspect of technology, whether it's computers, whether it's a new way to do something, and the industry has just been lagging behind. Whatever, we'll keep making the same widgets that we always have. You see this with pretty much any industry you can think of. And it really takes either one of those companies or a new company, generally it's a new company, to come in with a disruptive idea and disrupt that entire industry.
Yeah, I mean, this kind of goes to my new way of thinking, new being the past 10 years or so, about how I invest in companies. I mainly want to follow companies where I love the founders or the CEOs, because I've learned that so much of a company is from that leadership. So if you look at Tesla with Elon Musk, it's one guy. It's all of his ideas and his leadership style that lead that company. So to go back to your point about technology and innovation, if you take a company like Ford, they are good at what they do, making cars the way they do. But if they have to pivot, if they have to switch, let's say, to electric, how do you take a whole management team that's good at doing that and one day get them on board with something that we know is so hard to get people on board with, right? Electric cars. There's so much misinformation. and myths and so forth, you have to take that whole management team and shift them like that to electrics. Hardly ever happens. I can't think of too many industries, too many companies that I remember were able to actually pivot. I mean, off the top of my head, I can't even think of hardly any. Most of the time, they were good at what they did. So if you take Blockbuster, for example, they're really good at that model of having stores with, videos in them. But when Netflix came along, they just couldn't see it. They had the resources. They could have tried to compete with Netflix, but they just didn't see it. They just thought to themselves, well, of course, everyone's going to keep coming to a store and renting something. We were able to pivot from VHS to DVD to Blu-ray. So we'll be able to do it, There's no way Netflix, how's that going to work? You're going to sit at home and get to just call up a movie? Now, again, it seems incredible not to see it now, but they didn't see it. Their CEO came out and said, this is never going to happen. And it does. And so finding a company that's disruptive isn't just the hard part. There's plenty of cool ideas out there now. For instance, if we look at the real estate market, there's companies out there that are talking about how to do it differently with real estate. The question is, are they truly disruptive? Are they truly changing the technology? Are they truly going to catch? And if you can find a company that's not only disruptive in one area, but in multiple areas, like Tesla, then you might have yourself a big winner. Again, though, there's lots of caveats. Being first to market isn't always necessarily the best play. If we look at, say, Nokia with cell phones, doesn't mean you're going to be the winner. Are you the best to market with a disruptive technology like Apple? So they watched Nokia, they watched BlackBerry, and they said, I think we can do this up better. They come to market with something, and they win. And so, we're going to talk about that. We're going to talk about disruptive technologies, because I think, we're all probably here in this room knowing that Tesla is a huge company that we want to invest in. For a lot of us, it might be our number one investment. For me, it's my number one investment. And I think some of the things we'll probably be talking about over the months to come is, are there any other stocks, right? We all know that this is probably the best, most disruptive one, but are there plays on Tesla? Are there mining plays, battery plays? Are there other electric car companies? Are there things in other disruptive fields and technologies that we want to invest in? And I want to say straight up here, I do not have all the answers. I think you probably have a lot of cool answers. You probably looked into a lot of companies and technologies. You all come from different backgrounds. So I think we can help each other here to dispel some myths that we're hearing about, to bring in some information that we hear about. I'll give you an example. I was looking at QuantumScape. It's a battery company. And I was like, okay, a lot of this seems kind of fluffy, not really buying a lot of it. Seems really hyped. Yeah, they're working with VW, but it's going to be years before they come out with something. And then I heard that JB Straubel was on the board. And the only reason that came out was because they're going to IPO soon. And they had to release a lot of information when you're going to IPO. That bit of information came out, or at least it came to my attention. And I was like, oh, Jesse, JB Straubel's on their board.
And that immediately changed our minds because we know people in the world, and JB Straubel used to be working for Tesla.
Yeah.
He's no longer, I think he's still an advisor or something like that. He was Elon's right-hand man for, you go back and look at pretty much any unveiling, any stockholder meeting, he was right there next to Elon answering all the questions. And he was very smart, obviously. He had a lot of all the answers that he put out there were basically the right answer to whatever the question was. So yeah, we knew that he was smart. Now he's on the board of this other battery company. That gives us a ton of faith in that battery company because he's involved.
Yeah. And so, I actually did invest a little bit in QuantumScape, or at least in the SPAC that is going to become QuantumScape, just because I was like, you know what, could be a good play. A battery that could be better than anyone else's battery. That could be pretty awesome. And if JB's on the board, either he's on the board because they gave him a lot of stock, and he was like, oh, sure, I'll just be on the board for the fun of it, or he's on the board because he believes in it.
Right.
And so that's another thing we'll talk about, is sometimes you have a little bit of fun money that you can play with, that you're like, oh, I'm going to keep a little money aside for a fun play that, I'm not relying on, but could be something big. So tons of questions are coming in. I want to get to some of them. Jesse, maybe you can kind of be paying attention to the questions coming in.
Sure. The quickest, easiest one was, what was the name of that battery company? That was QuantumScape.
Yeah, it's going to be QS on the New York Stock Exchange once it becomes. So let's just talk about SPACs for a second. They're very popular right now. I'm by no means an expert in them because they're very new. Basically, this is where you have a company that goes through all the regulatory stuff to get listed on an exchange, usually like New York Stock Exchange. They basically go to a bunch of venture capitalists, they come up with a bunch of money, and they have on their board a bunch of people in a certain field. Let's say we're a automotive field. So I get you from Ford and this other guy from GM. We put together a board, and our sole purpose, we have a bunch, we're sitting on a pile of money, and our sole purpose is to look for companies to take public. And so we're just watching. And when we see a company that we think we should take public, we approach them and we say, hey, look at us. We've got $500 million.
Right. And specifically a private company.
Right.
If you want to do a SPAC.
Right. So, we've got $500 million. I've got, look at all of my board here. I've got this wonderful board of people who know all about your industry. We would like to take you public. When we take you public, we will guarantee a certain amount of this money that we're sitting on, plus we think we can raise a certain amount of money when we IPO. We're going to avoid for you all the time it would take, all the regulation, all the red tape to IPO yourself, because we have already done that. And you'll be like kind of boom, dropped into the market. Why are a bunch of companies doing it now? This wasn't a very traditional approach before. I think it's because so many people didn't get in on Tesla, and they are excited about companies that are like Tesla. And so companies like Nikola, they saw that there was this demand basically, and so they wanted to get in as quickly as possible. So Desktop Metal and Nikola and a whole bunch of other ones basically did this SPAC so that they can get into the market quickly. So instead of it taking a year or two or more, it can take as little as a couple of months.
And this is really exciting for investors because you can hear about this company that's going to IPO via SPAC, and then be like, oh, great, I'm going to invest in them as soon as they become available. And then that's usually only like a month or two later. Right. And so you don't forget about it. And you're not like, oh, right, oh, they IPO'd, I missed it. Oh, too bad. Right, you're like, oh my gosh, Nikola, they've got this amazing truck. Oh, I can't wait to invest in it. And then you invest in it, and great, you invested in it immediately, and you got to skip the whole IPO process.
I do want to ask everyone here, show of hands if you invested in Nikola. And I promise not to make fun of you.
We won't make fun of you.
I just want to know if anyone did. I will feel really good if no one did, knowing that maybe we had something to do with it. Okay, look so far. Fingers crossed. No one has invested in Nikola. That's awesome. That's great.
It's okay if you did.
It's okay if you
We're not going to judge you. This is a safe space. We're not going to judge you for the investments that you made.
Okay, good. So I'm glad that none of you did.
But see, you're peer pressuring people, right?
I am.
You're saying, "Oh, I'm so glad that no one did." It's like if I had, I wouldn't be like,
this wasn't scientific.
Yeah. Okay.
But I'm guessing everyone here was smart enough. If you guys watch the show on a regular basis, we've made fun of them enough. Yeah. So, and hopefully you guys are aware of what's been going on with Nikola. That basically
they're being investigated for fraud.
Yeah.
It feels good to be able to say that. For the longest time, we wanted to say we think they're going to be investigated for fraud, but they were being very litigious,
right?
Which means that they were going to sue people who basically said anything bad about the company.
Yeah.
So that was the
which is kind of a giveaway, like
totally.
But yeah, Trevor Martin is Milton is being investigated for fraud. There's so much stuff. I don't know if you guys read we put a link in our last show about them. If you read that, it reads like a novel of what, like, every possible thing you could do wrong with the company. I mean, appointing your brother, who knows nothing more than how to do, concrete installations, to be your head of hydrogen.
Right.
Like, yeah. Wow.
I think in a couple of years, it's going to be one of those kind of like mini documentaries that you see on TV, where they keep replaying the same clip over and over again before the commercial break, like, and then you wouldn't believe what Trevor Milton did next, and then it's like the commercial break. Yeah.
There's a question here. Don't you need to be an accredited investor to buy an IPO? So let's just talk about accredited investor. The rules keep changing slightly, but the last time I read them, I believe it was individual income of $150,000 a year, or holdings of $1 million a year, something like that. that allows you to, accredited investors allows you to do some certain things like become an angel investor. But for stocks, you do not have to be an accredited investor.
So, and let's talk about why you would need to be an accredited investor. So,
I think it's a scam, but yeah, let's.
the rationale, whether you think it's a scam or not,
200,000. Thank you, Mark. It's 200,000
okay.
yearly.
The idea of, about being an accredited investor is that you have to know what you're talking about. So that way, if you invest a lot of money and you lose it, I guess the brokerage can go to sleep at night knowing that you have enough money, or that you knew enough to know that you were going to lose money if you invested it poorly. There's this thing where it's like we're trying to protect people from investing money, which could make sense. You know, you could have someone who doesn't know very much investing their life savings into something that turns out to be a fraud or just a company that goes bust. Oh, how sad. But the problem with that is that you can do that on the stock market right now.
You can do that with scratch cards. You can do
You can do that with a lot of different things.
You can go to a casino. You could,
But that prevents them from being an angel investor and investing in a company early on. So giving money to a company so that way they have a seed round, enough to pay their employees when they're not making any money, in order to develop a product to bring to market.
It also kept a lot of. So when we a few years ago we did some ads for Wonder Capital. They were a company that basically fund solar projects, and they were offering a very good rate of return. I still invested in them of like 6 to 8 to 10% a year. And a lot of people wrote to us and said, Zach and Jesse, I found out I have to be accredited to do this investment. I'm not. And yeah, that sucked because it's a very solid investment. There wasn't a lot of risk there, and you got a great rate of return. And yet you had to already be rich to invest in it. And that's what I think this basically is yes, you could pretend it's to protect people. It's basically to protect the rich, keep the rich getting richer, is the way I've been looking at it, because it keeps many normal people from getting into investments that, as long as they're careful, aren't any riskier than
a stock
anything
market.
else.
Right. So that's our little spiel on accredited investors.
But no, so anyone can invest in an IPO. Basically, an initial public offering is when a company goes from being held privately to being offered publicly on the markets. And it's exciting for some people because they think they can get in on the ground floor. You know, when Tesla went IPO'd at $18 a share, although now there's been splits, so that doesn't make sense anymore. But, it was something like $18 a share, and then immediately, start going all the way up to, say, $100 a share. There's no guarantee that when a stock IPOs that it's going to go up from that point. So just be aware that there's no reason on the very first day that you have to get in. But there are some companies that, if the market's hot, they go in at that price and then they keep going up, and you feel like, oh, I missed out on the IPO.
Right.
All right. So should we get to some questions? How do you guys want to?
Well, so I think there's one last structural piece of thing. So we're going to be doing this monthly. And as you can see, we've already burned up about 40 minutes just talking. Hopefully that won't happen next month. So one thing I want to do,
can we talk about Slack?
So I want to set up, I don't want to set up a Slack. I want to have one of you set up a Slack. So that way we can all be talking during the week, and we can be setting up different channels, because unfortunately, a big Zoom call like this isn't the best place to kind of get into 1,000 different stocks. And it would be really great if we had a Slack. So if anyone is an expert in Slack or has used Slack before, I would love to have put you in charge of the Slack for this. And basically what we'll do is get an invite link at the beginning of each of these monthly things, and you'll just post the link. We'll tell everyone, oh, if you're new here, join the Slack, and you can all chat, talk.
And let me just go back one step in case any of you are like, what the heck is Jesse talking about with
Yeah.
Slack? So Slack is an app that basically, it's kind of like a messaging / email-ish kind of app that lets people, usually in companies, talk to each other. And what's nice about it is, unlike email, in Slack there are channels. So kind of like Discord has channels. So we could have channels on, let's have a Tesla channel, let's have an options channel, let's have a Arcimoto channel. And you could even break it out further if you wanted. And that way, once we set this up, things that you're interested in, you can follow, and you don't have to follow all the junk you're not interested in. And that way, you guys can kind of go in your own separate little spots and start talking to each other, because the value of this club is the fact that we're all here and we're all pretty smart and we can all talk to each other.
Now, you might be asking, why not Discord? We could do a Discord if you all really wanted one. The thing that I don't like about Discord is one single thing, which is that if you write a message on Discord, pop it in a channel, and I want to respond to that, I have to just write a message and put it in the channel. And if 3 other people had already done that, I'm responding to you, and I could say, at Bill Korb, yada yada yada. I think that you're wrong about Nikola. It's a fraud. I can't believe you thought that it was a good idea, and I could send that message. But it's just, I don't like the way that it works.
It doesn't have what's called threads.
Threads. That's the one thing that I like about Slack over Discord. There are some disadvantages with Discord, which is like you have to pay for it in order to
Slack,
to save stuff with Slack. But we can take care of that, I think. So anyway, that's kind of what we're. Yeah, I mean, there's a bunch of different things we could use. I like Slack. We could do a Discord. We could vote on it. We could figure something out if we wanted to do that. But anyway, that way we could all be talking about stuff throughout the weeks when we don't have a big meeting like this, and it could help us kind of work out topics for meetings like this, and then we could do special research.
Exactly.
And we can all.
I mean, that is the power of a club, right? Is that when we have a question like, who's on the board of that company, or can one of you guys go look into whether this new battery startup is a good idea? Someone spending a few hours doing some research can be super duper valuable and can help the whole club out, because it can be like, I found out this information that you guys all need to know. Also, it's really nice just from an emotional aspect, because if we're all having, say, a bummer week in the stock market and we're all like, oh my God, I don't know what to do, I'm on a cliff, we have the rest of the club there to be like, I'm with you, let's all stick together on this. And that just emotionally is a nice thing to have. And it sounds like you guys are already talking up another. There's a bunch of different. Yeah, we could go different directions. But yeah, so if anyone is out there who would be good at moderating on Slack, that would be super awesome to take that off of our plates, because then you could run with that. So either message us here today, or if later on you decide you might want to do it, email me at zach@nowyouknowchannel.com and let me know. Because if we set up the Slack, that'd be fantastic.
And we might already. It looks like some people have already set up Slacks, so we might. We might have 3. We'll pick one. If we don't pick yours, it's not because we don't like you. It's just because we found someone else's first.
Right.
So then we can. So then, and we will. We can also post the link on Patreon to the Slack, so that way we can get to it probably tomorrow or the day after.
Anyway, so I would love to get a couple of questions. Maybe we could go to a few hands and see how many questions we could get in. And just They don't even have to be questions. You could comment. Just let us know like what you're hoping to achieve with your investments, like what kind of investor you are.
Yep. So just hit there's like a little hand icon in the participants section of Zoom.
Yeah, and we'll try and get some questions right now.
Yeah.
All right.
So we'll start with your Swiss uncle.
Hey, y'all, this is Eric, your Swiss uncle in Atlanta. And the reason I said that is I had just retired from 25 years IT, 10 years in investment compliance. And August 31st, because of Tesla, I decided it's time to kick the bucket and enjoy and have the last few years of life doing what you love from the heart. One of the things is investment, and checking us Zach and Jesse, which was fantastic. Yesterday's video was fantastic. I think it's the first one that actually calculated the actual potential of what this means, and everybody's missing out. One thing that I want to share with everybody here is because we are a community, we actually know more than most analysts out there on what is the significance of Tesla and the disruption that is going to be in the next 10 years at least. So that's why I decided to cut off all the other junk I had and invest in Tesla and a few things and monetize it so I don't worry about money before I even hit Social Security age.
So can I
So-
ask you a couple
Sure.
of questions there, Eric? So first is, if there was no Tesla, when would you think of retiring? How many more years from now would you think?
Oh, it would have been at least 7. Okay. I invested in Tesla in 2012. I put $8,000 at $27. The first time my 401k allowed to buy stocks. And I follow all the rules of the of investments, dollar cost average, don't put all your eggs in one basket. BS. I should have followed my heart. Later on, I was so scared when Tesla said they were going private at 420. It was 350. That was my second purchase of Tesla. I put $100,000 at that time from other junk I had. I put it in Tesla. Those two purchases in 8 years is enough to retire. Okay. Now, I have been following Berkshire Hathaway's. What's his name? The guy from Buffett. He wrote a book, and he said you only have to find 3 stocks in your lifetime that go 10x. Okay, from 1,000 to 10,000, from 10,000 to 100,000, and bet 100,000 to $1 million. I had never purchased $100,000 in a stock in my life, and I never purchased any stock more than $10 until I bought Tesla. And I tell you, it changed my life by just following those principles and following my heart. And here, a lot of people are afraid of how to invest and so forth. And I tell you, I follow almost the same guidelines of what you mentioned. About how you start. It was really hard in the 90s. You had to come out with $500, $2,000 to open a brokerage account. I think the first one was E-Trade that allowed you to open it with $500. It was hard. And then investing in mutual funds on a 401k, and then hitting the 2001 when I lost 80% of all my money in the mutual funds. It was really scary. So what I wanted to mention, in 2008, I had $100,000 cash. That's it, in my 401k after 35 years of working. And from 2008 till now, it multiplied by a tremendous factor, more than 10x. And it just allowed me to realize that you can retire. 3 years ago, I tried to retire. Tesla was not anywhere in the picture. And the numbers were not there. I had to work till I was 65 or 67. And I just turned 60, by the way. So I cut down 7-8 years because of the decision to buy into Tesla and to hold no matter what. Now, there's a lot of people that with holdings in Tesla, if they use options, they can monetize that investment in Tesla on a weekly basis and make a lot of money on it. But in 401k investments, you are not allowed to buy options. So I'm trying to get out of my 401k into a self-directed one that I can, sell some calls options from time to time. And, but I have to cash out 100% before I move into and buy Tesla back again. So
let me just ask you, so there's a tax implication here. I'm assuming we're talking about the US, where basically you grew that money tax-free, I believe.
Right.
And when you take money out, it's taxed. Is that correct?
No, yes and no. Because this is what's going on. So I got a solo 401k from my wife once a year, eBay sales. She can create a solo 401k as long as she's trying to do a business. She don't have to make money. So we created that 401k that owns is a trust. So when I moved my 401k from work, and I had to quit to do it, I can move the money into my other 401k without taxes. Now, the deal is, and this is what I've been researching, is I can create a C corporation and capitalize it from 401k money without paying taxes. So I can move, let's say, $500,000 of a Tesla stock in cash and create a company that has now $500,000 on the other side of the equation, because it's an investment on the stock by your own 401k. But you can only do that if you are the master of your destiny. And that is one thing that no financial industry person will ever tell you how to do, because they don't sell it. And you got to be very careful, because what we call those advisors, or I heard they're called goldfish advisors, because they can only buy or sell you what they can sell from what their stocks are.
Right.
And that's why they don't want you to do anything outside real estate, or any other investments. So you got to be very careful to send people to financial advisors. To me, they're predatory, and a lot of them, they have only their own interest in their mind. And I was a financial advisor once. I was just fed the Kool-Aid, and I was passing it on. And the moment I stopped drinking the Kool-Aid is when I finally started doing the investments from my heart. And Tesla had been the main investment from my heart, and it's been paying off tremendously.
Wow, this is super helpful, and this is exactly, I mean, I don't want to pat myself on the back, but this is exactly why I want to start this club, because Eric, you have information that, like you said, you can't normally get. Like just what you just said about moving money from a 401k to a C Corp. I can tell you, I've read tons and tons of books. I've talked to some lawyers. You're not going to hear that from anyone else, and yet it makes total sense. That's how you do it. And what's huge about what you just said was when you're talking about $1 million roughly of earnings, you'd be giving a lot of that back to the government if you don't do it right.
Right. And the other thing that I just want to know, and this is what I call that channel that you know for Slack called the Swiss Uncle. Because I wish I had a Swiss uncle to tell me all this. I've been learning this in the last 5 years at a tremendous rate of speed. And by the way, it's very hard to hear you very slow because I normally watch you in the YouTube Premium at 1.5, 2.0 speed.
So I sound drunk, right?
Oh, this is like very slow. I mean, I'm so excited. Like yesterday was the first one that I had to slow down because Zach, you were, you know, out of your element. You were, you know, really excited. And the numbers that came out, I mean, nobody else out there had figured that out, that the power of what's coming through. I mean, 96 amps from a battery. I mean, we're talking, I mean, totally mind-blowing. And that's why I expect to, the day after, probably overnight trading, which I don't have access to on my 401k, will go bonkers. And right now, I just got another one. There's a guy who has a channel, Tesla Fan Insight. He's really, really good. He's actually broke Patreon because he charged one time $5,000 to guarantee you could become a millionaire in 30 days. And all this in Tesla options. And I know, we all know, remember Jack that passed away?
Mm-hmm.
He did an investment in January or December at 25 cents options. And he made $2 to $3 million in one trade. And that was Tesla when it finally hit like $600. I mean, so there is tremendous power. And this power, it is all about community because you have to know how. You really need to know how to do things. In this country, there's a tremendous opportunity. And I mean, I can keep talking. So let me pass it on back to you. I think we can do a whole show on how to get started step by step, which is my whole point of the Swiss Uncle. I got a Facebook set up, and I plan to do it's like same as what you guys are doing. It's just a club of knowledge, because nobody knows everything that you can do, and it's only experience that really helps.
That's exactly it. I mean, you know, people who grow up, let's say, lucky enough to be in a wealthy family, they already learned all of these tips and tricks from their Swiss uncle, from somebody who passed them on. The rest of us kind of regular folks, we only, luckily, if we're super lucky, get to that point after making lots of mistakes, after, many years. And yeah, wouldn't it be great to have all the tricks that you basically learned the hard way passed on? So thank you, Eric, because I think that we're probably going to be coming back to you a lot for more wisdom. Thank you.
All right, let's move on to Andrew G.
Hello. I wanted to say that, like our Swiss uncle there, I had a hard time investing a lot, in one stock, and Tesla was the first time that I was able to do that. And that was in part just because of the confidence of knowing that it wasn't going to go to zero or become worthless, as the FUD people were saying. It was clear that, Apple or somebody would step in to buy them out. And so, for the first time, I was able to put in a big chunk of money, and it really paid off. So it's hard to know when to do that, but the YouTube community really helped, build up that confidence, I think.
It really is cool. I mean, I feel like for the first time in history, there there used to be newsletters like for the longest time, but you could never really see who's writing those newsletters that much. Now you get to see if you really believe in the person who's talking to you. So, when you hear from, say, us or Gally or someone that you're like, okay, they seem to know what they're talking about. And then there's plenty of crazy people who don't know what they're talking about, but you can usually quickly see that. So yeah, this is great, having a YouTube community where you can get this information. But you brought up a really interesting point, which is I got used to different points in my life investing certain amounts of money. As a kid, it was $50 or 100. Then it was, maybe 500. And then I got to a point where when I started pulling the trigger on Tesla, I started to realize, wow, this is 5% of my portfolio. This is 10% of my portfolio. And I got a little scared, to be honest. I was like,
yeah, absolutely.
Conventional wisdom is don't put too many eggs in one basket.
Right.
And so it took a lot for me to even get over my own fear of being like, I'm going to have to let this become a huge portion of my portfolio. And I mean, a question I'm definitely going to want to ask Eric sometime is, he's got basically all of his eggs in that, it sounds like. On a day where Tesla does take a hit, where there's some, bad news, it must be super hard emotionally. Yeah, Eric, if you want to come back in here, I do want to find out, what does it feel like on a day where Tesla's taking a hit and you're just like, oh my God.
No, and that's where there's a difference between men and children. You have to know. I mean, it is. You put it on the table, and hopefully yours are made out of platinum or nickel. But this is what 3 years ago I tried. How do I transfer all this wealth on paper to actual things that generate income? Because owning the stock on a 401k, you can't eat out of it, and you are afraid of selling because it's still gonna go higher. So playing games, buying and selling. I worked on an investment company with mutual funds, and I had the most restrictive policy of what to do. I had to ask permission. Can I buy or sell some stocks today? And they check if their funds were buying it, so that I could not buy it if somebody else was buying it. So what I decided to do is 3 years ago is like, how do I change to income? Because all these stocks you have in Tesla, all the amount of money, it doesn't mean anything. And what I did is started to move things into income producing assets. But as you said, you actually have to kiss a lot of frogs to find some prince out there. I bought companies that went to zero. I mean, that's part of the learning curve. I bought into real estate investments that I thought it's going to be generating money right away. And it's been 3 years and I had not seen the first penny. But what I found out is that some type of investments in real estate do produce income, and you can actually passively own them. So I've been transferring probably 30% of my portfolio into those assets that will generate enough to replace my income. But the last asset I will sell will be Tesla stock.
That's really interesting.
So to me, I think it's about the fundamentals. I haven't done a lot of, I was just, like you said, investing a certain chunk, and that was just my standard. That's what I'll buy. Oh, I heard about that company. It might be hot. I'll buy that little chunk, and I would just buy lots of little chunks. With Tesla was the first time where I started hearing about the fundamentals. This is the fundamental of the company. This is why it's, why it's worth this much, why it's going to be worth this much in the future. This is where it's going. We can project these numbers out. And it's just amazing how accurate Gally and company are at predicting the future. Right. And
that is not fundamentals. That is not fundamentals. That's actually the opposite.
Well,
all stock analysts are looking at
rather than just playing it by ear.
Right. It is. They're looking at the future, and all the analysts are looking to the past, and that's why they cannot even put any dollars into the energy or solar or self-driving. And ARK Invest had been the first one that actually had broken the mold.
Well, yeah, I want to talk about that point for a second because I think it's a really big one. I think you're both hitting on a different side of it, which is when I traditionally would look at a company, there'd be certain metrics that make me feel comfortable. Oh, okay, here's the PE ratio. It's 18, and in this market, I feel good, blah, blah. When you look at Tesla, there weren't, and I think this is why so many analysts screwed up on it. First of all, they called it an automotive company, so they tried to pigeonhole it into the automotive sector. and they looked at it and they're like, well, this doesn't make any sense. But yeah, when you look at it from the fundamentals of normal stock companies, it just doesn't make any sense. It doesn't look. Of course, that's why so many short sellers said, you guys are all on some kind of Kool-Aid here. This company is gonna, you're just following blindly this cultish leader, and it's gonna bust. And that is because every now and then, when a disruptive company comes along, it makes absolutely no sense. Let's look at Facebook. Going back, it makes sense, but to imagine a company that's going to go from college campus to college campus and get people to put their profiles on it, and then will become one of the largest companies in the world, I bet none of us here would admit that they thought that would work. I mean, it doesn't make any sense, because what has ever happened like that in our lives? And so the same thing is true with Tesla. We're talking about not only disrupting cars, but if all the different plays work out that we think, it's going to disrupt so many different industries. And so right now, most analysts are like, you guys are crazy. How could that possibly happen, especially on the time frame that you guys are talking about?
Jesse, I wanted to mention that what is happening with the Giga Texas, which you guys call it really early, and Giga Berlin, I am betting, I mean, they're talking 40,000 employees. I'm betting they're getting ready to build about 2 million cars on each of those factories. They're just not telling it now. And I think you guys had smelled it, that this is something, I mean, Giga Texas is 10 times Fremont.
Yeah, it could be. I mean, I'll be honest, sometimes we're trying to keep the expectations low too, because we realize that we're still just dealing with humans here.
Right.
On paper, it's one thing to set up a factory. It's another thing to actually get it up and running. So a lot of times we're doing the same thing. We're saying, oh, let's be conservative. This can make this many cars a year. Right. But you're right. If you go out just a few years, this could become a huge juggernaut.
Right. And especially changing the way that we're kind of thinking about building factories. I mean, when they started building the Gigafactory, gosh, it was back in, when was it? It was back in 2016. And I mean, it's not done yet. It's not there yet.
How much they do in the Giga Nevada? 35 gigawatts? Is that all they can produce right now?
I don't have the number off the top of my head.
Yeah, it seems like it might be a little higher than that, but yeah.
Right. And I mean, just having this difference in speed between the two factories being built between Nevada and China, where it's just like you turn around and it's there. And the same thing with Giga Berlin. I mean, it's coming together really quickly. And the same thing with I mean, obviously nothing has been put up yet, but they've been doing a lot of digging at Texas.
Or I just want to talk about the gigapresses. I mean, so right now, over the course of just a couple of weeks, we've gone from this idea to actually 2 gigapresses at the Fremont factory, which no other car company is even attempting, it seems. And so if Tesla can pull this off, and it looks like they are, they're going to have a completely different way to manufacture a car. Are you kidding me? Right. So they're going to be able to transfer this into all their gigafactories? Right.
Jesse, how many cars Mustang was the best-selling car forever. I mean, remember in the 60s when it came out, they had a ton of orders. And what makes it a very big point is that Model 3 broke those, almost like orders up front, and Model Y and then the Cybertruck, they are like hit. I mean, I don't even think there's any other car in history other than Volkswagen Bug that have been manufactured for 60, 70 years that are talking of those numbers. We're talking a juggernaut of numbers. And then nobody knows where these batteries in Texas and Berlin coming from in the next year. Something really, really big is happening. And I think, as I mentioned, I'm going to sell a third of my stock on Wednesday, because it's going to be so amazing that it's probably going to start up at a very high number. Eventually it will drop down because people take profits. But that is a great opportunity coming up next week.
Yeah, and we don't even know, when S&P 500 inclusion, the official date of that will drop. I don't know how much the market has already factored that in. I don't know how many fund managers of S&P 500 companies have actually gotten their hands on the stock. And I don't really know for sure the time frame of when that'll be announced, but I do think it'll be very soon.
Jesse, I asked portfolio managers that handle S&P, they cannot buy on the announcement day, period. and they will tell you them how many days before you have to be on the index. Normally it's 5 days. And this is from the guidelines. You can go to any S&P prospectus or statement of additional information. It will tell you exactly what they can do. I mean, they have to follow the fund for 80% of their holdings to be called an S&P fund.
Mhm.
And those are for the active managed. There's $17 trillion as of July in S&P following the index funds.
Right.
17 trillion.
I know.
It is big. It's going to be big. And I think it's all that happened. That's why the split happened. And that's why they raised the $5 billion, because they need more stocks. They know that Russell already went in June 22nd, and Tesla went in as below number 37 when I calculated it. So those stocks are not free to buy or sell. And even with the split, it's the same number they got to buy. So I don't know. The more they wait, the deeper is gonna, or the more impact the S&P inclusion will happen.
That's true.
Yeah.
I want to ask a question of everyone here. So, a show of hands, how many of you think that Tesla will be included on the S&P 500? How many think it will be included?
It's not show of hands. It's clicking.
Sorry,
yes
clicking the
button.
yes. Sorry.
Oh,
Okay, so let's see. It seems about at least over half now up here. About half think that it'll be included. And how? Just to be sure that I'm getting the right number here, how many think it will not be included? Click no if you think it will not be included on the S&P 500. So click no if you think the Tesla won't be included on the S&P 500.
Got one so far.
So just one. Okay, interesting. Yeah, I mean, I can't see any way politically that they could not include it on the S&P 500. Interesting.
before my turn is up, I just wanted to mention my hot stock tip for those that might not be aware is the ChargePoint reverse merger.
Charge
that's-
point reverse merger. Okay, cool.
I think everybody
Yeah,
might be.
that's a good one.
And can you just give me a little bit on why this is your hot stock tip?
Because it's ChargePoint, and I use it, and that's one of my key metrics for whether I'm interested in a stock or not. Is if I use it personally, then
Okay, so tell me, what do you like about ChargePoint?
They never made money.
that they're everywhere, that they're ubiquitous. I haven't actually gone and looked up all their financials and stuff like that. This is just introductory. Let's discuss this on our Slack account and dig into it and find out everything about it.
Interesting. Okay, cool. Yeah, that's definitely something we should be talking about. I do want to just warn that my because I've gone and talked to people at ChargePoint and stuff, and I've never gotten a warm fuzzy feeling talking to the company. And to me, because we've been lucky enough now to talk to so many companies, we kind of have a little spidey sense when we talk to companies about whether they're kind of going someplace or whether they're not. I don't know. What are your feelings?
I disagree. I mean, I agree with you that I don't get a warm fuzzy feeling from their management that they're definitely not the best charging company, but they definitely are one of the biggest. And they just kind of have this advantage by having those charge points around. I think that it would be very easy to disrupt them, to make a slightly better charger, to make a slightly just better system to where, the charger's broken. ChargePoint 2.0, whatever the new company is going to be called, will come and fix it. Instead of, that's not our responsibility. That's up to the property manager to get that repaired. And you're like, okay, so you're not going to be able to charge me any money because I'm not going to be able to use your system. That's kind of my thought, is that, yes, it seems like they're very easily disruptible. And Tesla could do that. It could be any other company. Any other company could burst onto the market and say, we're going to revolutionize charging. We're making lamppost chargers, so we're going to work with cities, and we're going to say, hey, you city, we're going to put in lamppost charging. And the city goes, oh, good. I can check that off my box. And this company will, there's a lot of different things I think could happen.
Yeah, definitely worth talking about, but my first knee-jerk reaction is not one of excitement about it.
Yeah.
I think there are a lot of companies that are trying to cash in on getting into the market right now to get your money, because they're like, this is hot, let's go get some investor money, and nothing wrong with that. But ChargePoint, to me, I don't see a big
Well, and the stock could pop up, and then you could make your money that way.
Yeah.
So,
Yeah.
I mean, I'm not.
Yeah,
Gonna
definitely
say
something
This
to
is
talk
exactly why I wanted to bring it up. That's good.
Yeah.
Thank you. That's really good.
All right. Let's move on to Hassan Kuba.
Hey, Zach and Jesse. Hey, everyone.
Yes, son.
Hey. So I actually have a background in angel investing,
Okay.
but I wasn't, haven't been doing any stock investing at that time. I was kind of more into real estate just because I had this once very risky, high risk thing, and I thought I'd do something else. I'm based here in London, where like real estate goes up, doubles every 9 years or so. So it's always good for capital gains. It's pretty good. So I actually discovered Tesla. Like I knew about Tesla, but I never did any stock investing at all, and I bought in very late. But the reason I bought in is because of your channel. I was researching Elon Musk's history. I have this pet project where I'm just doing a storytelling type of thing about his history, and I call it Success Decoded. And I'm trying to like figure out like what can we learn from him? What were his unfair advantages, as I like to call them? And it's been fascinating. I've gone down this rabbit hole, and now I'm like a huge fan of you guys' channel. I've joined your Patreon, but I'm really excited about this investor club. I really believe in masterminds, and I'm really excited that we're starting this. I already volunteered. If you guys need help with setting up a Slack, happy to do that. And I know we've already gone over time, so I just want to say that I think the question I'm seeing most that people are asking is actually about battery day. People want to get even more prognosis from you guys about battery day, about what the stock price is going to do. Somebody said, and I think it sounds about right based on what's happened in the past, which is that it actually might go down because everyone's going to increase in anticipation of it. So, which is what happened last time. But yeah, I've already made a tidy sum from Tesla money, from Tesla shares, just thanks to you guys. So yeah.
That's it. Yeah. Thank you, Hassan. Thank you for being here. This is really going to be a lot of fun. With Battery Day, I do think the market might have priced in a lot of hype because we've had so much time now to really think about it. If it had come out back in March,
oh my gosh,
I think that maybe, we would have just been like, oh, wow, this is amazing. But I don't think most of us are actually, I think two things. So I think, A, we priced in a lot of cool things that could be announced. Secondly, if it's anything like Autonomy Day, I don't think most people in the world will have any clue what the heck he's talking about. I think that he will do his normal presentation. To us geeks, we'll just be geeking out over it.
They'll come out with their new battery. They'll say, here's the new battery. It's got this, 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 and this. And to everyone else, it's going to sound like, and everyone's going to go, what the heck was that about? I don't understand that at all. And we're going to be over here going like, oh my God, 96 amps per cell. It's insane. And everyone else is just going to be like, who are these people? What are they saying? Who knows? It's exactly what happened with Autonomy Day. Autonomy Day didn't make any sense to anyone because they didn't believe it. They were just like, you can't.
The believe part.
That's another part of it too.
You can also say a bunch of things, but a lot of analysts the next day are going to say, yeah, well, if we can do that.
Right. And we found this one thing that Elon hasn't done. He said that he was going to do X, Y, or Z, and he had, usually comes back to autonomy. He said that they would have self-driving cars by 2020 or 2019 in September. He said that they would have a self-driving car across the country. And it's like, okay, that's the one thing he hasn't done.
I want to go to Jim Cramer on CNBC when he was talking to Rob Maurer. And I think basically Jim Cramer did not understand what a 1,000,000-mile battery is. I think he thought that meant range in the car.
If you pull up that clip, it's
painful.
Freaking hilarious because he doesn't understand. He's like, you don't need to go 1,000,000 miles per charge, which good job, Jim. Thanks for thinking that. That's good. Okay, yeah, you don't need to go 1,000,000 miles per charge, but that wasn't what was said. And Rob really handled himself very well and just sort of explained it to him. But it was really funny how Jim Cramer, who's an analyst and who's had his mind changed about Tesla, still doesn't understand Tesla.
Right.
It's like I could understand if he was Mr. Sell, don't even lease Teslas, that kind of guy still, which he's not because he drives one. But he still doesn't get that the 1,000,000-mile battery wasn't that.
And so I'm just saying, if that was a glimpse at what that analyst doesn't understand about something that we all get, imagine how many people aren't going to get some of the nuanced stuff that might come out at Battery Day, or even just the 1,000,000-mile battery. If that's all they come out with on Battery Day, that in itself, we've hyped it. But that itself would be unbelievable.
Right.
We'd be unpacking that for a long time. So yeah, but I don't want us to get too excited about what's going to happen after Battery Day the next day, because the market is the market. It's not us 50 people in this room.
Yeah.
It's a bunch of regular people, and it's going to depend on a bunch of things: how it's reported on, whether they get it. So I kind of think it's been priced in, to be honest.
Yeah, and I'm just I'm taking a step back from it. I mean, it sucks because I wish I could be like, oh, Battery Day, of course, it's going to explode. I can't tell both what's going to happen, because I mean, again, Elon could roll out on stage and he's like, oh, you remember the Roadster that we showed you a couple of months ago? That's a piece of shit. Check out this new Roadster that we got. This one, look, it's here. It's gone. Boom. Like, who knows, man? Like, it could really blow our mind.
And that is why with options trading, I mean, I've done some limited options trading in my life, but with something like Tesla, I'm kind of afraid to do options trading because
That's not what you want to do, options trading.
yeah, because I mean, I have some friends who are doing fantastic at it. I'm not saying there's anything wrong with it, but it's not just your knowledge of the company. It's also, you have very limited time frames usually, and you're also dealing with what the market's going to do. So it's, that's why I'm long on it, because
Right.
I know eventually it's going to work. I just can't tell what time frame. Oh, wait a minute. I got to call on Ross here. Let's get Ross. My buddy Ross is here. I wanted him on the call for you guys because he is actually crushing it with options.
Yes.
So,
when I said don't do options trading, I meant what was it, Delta options trading? Was it where you just hope that your options expired
Right.
worthless? Ross, you want to unmute?
There we go.
Did that work?
Yep.
There it is.
So,
Okay.
Ross, first of all, could you just give us a quick background on your stock investing in Tesla, and just to give people a sense of where you're coming from?
Yeah, sure. So my background, I'm a mechanical engineer. I have 45 US patents, so I'm an inventor, you could say. I'm working on patents on electric vehicle transportation tunnels, so like the Boring Company tunnels, and special fire trucks and different things. So I'm doing a lot of interesting things. About a decade ago, I was CEO of a company for fusion energy I founded, wound up with some problems with management. Long story short, I lost my house during the 2009 housing crisis, and I wound up essentially homeless. Earned a couple $1,000s one year. I've earned almost $0 for the last decade. And so I've been, on food stamps and extremely poor. My parents, father passed away January, and in March I received $80,000 in inheritance, and I've been writing articles for Seeking Alpha, and primarily on Tesla because I hope to sell my patents for the tunnels to Elon. And a couple of years ago I began doing investing trading in Investopedia using $1 million of funny money. So it didn't cost anything if I lost, and so I figured I'd try every crazy thing I possibly could. And during Autonomy Day, for example, I remember explicitly that I go, wow, this is going to be so amazing. Everybody's going to get it. And with my $1 million of funny money, I did call, like hundreds of thousands of dollars worth of call options, and the price went down, and I lost in like a couple of weeks $500,000 out of the $1 million. And I had done several plays for a month or so. And so I figured, wow, I'm doing options really wrong because the public doesn't understand the technology, because that was phenomenal news. And yet the stock price went down. And so I came to the realization that I believe that big oil has been behind a lot of the short interest. And so it didn't, it's like, what's his face on Seeking? I mean, there's all kinds of writers on Seeking Alpha that write FUD stories. Anyway, so I learned that there is a good way that you can do options. You do it just like shares where you're buying for the long term. You just get options with a longer maturity time. So I started getting options with 12 to 18 to 24 months maturity times. And then all of those little drops tend to take place over a week or a couple of weeks or maybe a couple of months. And so if you have an 18-month time horizon on the call options, then you have time to sell them at a point in time when the stock is up, because it's following, you know, a zigzag up and down, but steadily upward. So anyway, I took the $80,000. I had learned what I felt. Well, I took the, you know, million, dropped it to 500,000, and then changing my call option strategy, I built that up to about $8 million. And then now the account today, a couple of years later, is up over $20 million, funny money. And so I felt, you know, ready to do real investing when I received my real investment. So I took the $80,000 and like someone else already said, following Warren Buffett's idea of, you know, finding something that you actually understand. I understand Tesla really well because I'm developing technology for it. And I took the 80,000, put 100% into Tesla stock. And as of right now, the 80,000 is now about $1.2 million. And I have a Model Y on order, and I just today bought a house. And so,
Congratulations, dude.
yeah, so just before this call, we were just up there doing final inspection. And so, I mean, it, you know, it hasn't closed escrow yet, but I just put the offer in, and all of that is with the earnings from the Tesla shares. So what I realized the other day is that while call options are risky at times, you want to get in there and say hello? That's Ari to the side. He's coming in to check on me talking on, because I'm talking on YouTube. Anyway, so with options, they're generally very risky, and that's very smart, because the market can do something completely unexpected. You know, it's like this battery day, the stock price should jump up like crazy, but it could go down. It was like when the stock price dropped a week ago, I lost $120,000 in a day. And then the next day, the price went up, and I made $70,000 profit. And then the next day, it went up more. I made another $50,000. You know, so it was down 170, and then back up 120. Now I think it's just about to where it is. But it isn't unusual for the value of the portfolio to swing. I think the biggest loss was like almost $250,000 in a day. Just a month ago, I was down to $350,000, and right now it's at $1.2 million. So it can go up a bunch, but I realize that what I'm doing, the safest way to play an option is 18 to 24 months. So for example, I had a bunch of September 2022 calls. The most risky way to play it would be some of my calls I have for next Friday. Some I had for this Friday, which I just sold off at a nice profit because I bought them a little while ago. But I'm guessing, I think the price is going to go up after Battery Day. And I think we're going to pass 500, maybe as high as $600 per share. But I'm ready. It could collapse. And so I'm going to sell off a part of my position on, you know, the day of, but before the Battery Day. I'll sell off some in order to lock in the cash for my deposit on the house. But the majority of it I'm going to keep in there because I really do think it's going to go up. But the unique thing that I've been doing, you know how you guys with buying stock, you're doing dollar cost averaging. So you're buying a little here and a little there and a little there. And as it goes up, you've bought in, and your basis is, you know, at some value well below where it is. Well, I'm doing sort of the same thing with calls. What I'm doing is, instead of dollar value averaging, I'm doing time value averaging. And so what I'm doing is I'm looking at the time frames where I expect the share price will go up soon, and I buy calls that have a shorter term time horizon when I think the price is going to go up next week. And then if I don't know what the price is going to do, then I buy a longer time horizon call. And so when I'm uncertain, I buy long time horizon, and when I'm certain, or which I could be wrong, but when I believe it's going to go up imminently, like next week, I believe it's going to go up, I will play a portion of the portfolio in some short time horizon. But most of my portfolio right now, for example, is in June 2021 and September 2022 calls. That's a bunch of it. A good chunk is in just straight stock, so that's very much more secure. And but I do have some for next Friday, and then I have 2 different dates in October, because Q3 production is going to come out on the 1st. And I think the production is going to surprise everybody, and the stock will take a jump up. So those are my short-term calls, and then my others are the long-term calls. I would just say a couple other things, Zach, on ChargePoint. I was a little surprised to hear your commentary, because I was thinking ChargePoint was a real good one coming toward the SPAC also. I guess what I would say is, knowing Tesla, we're jaded with superchargers, and so everything else is kind of junk. Why would you go there if you have a Tesla? But if you don't have a Tesla, I think ChargePoint is one of the biggest ones out there. And so I think it's going to go up just simply because it's first player. But like Jesse was saying, it's very possible somebody else will come in and knock them off. But I think that's probably a good one to get into. The other day, I bought a whole bunch of shares of Giga Metals. So almost all my portfolio is in Tesla, probably 90%, but 10% I'm trying to find some other things. I bought a bunch of Workhorse because I really liked that one. And I bought like $50,000 of that, and it went up to like 100, and I sold it at 90 because I got goosey with something. So that was like another 40,000 right there. And then Giga Metals, I bought a bunch of that, and it went up the next day. Well, it went up that day. It was like I bought it in the morning, and I made $30,000 in the day on the stuff. And then over the course of the next week, it's dropped down. It's way down low. And I was looking at them 2 months ago, watching interviews and stuff, because they've got like the 6th largest reserves. It just needs the price of nickel to go up a bit. And Elon had said, nickel miners mine more nickel and all that. And looking at the interview a long time ago, the CEO said that they were in talks with a bunch of the different car companies, and in particular, with those gigafactories. Well, there's only one car company with gigafactories. And so it made it clear to me that he was in talks with Tesla back then. And so when I saw the news release Friday that they were in talks with Tesla, it made sense and clicked. And so that's when I sold Workhorse and bought Giga. And then, of course, it's gone down. So I'm hoping that on Battery Day, Giga Metals gets mentioned and the stock price jumps back up again. If it doesn't, then I'll probably sell Giga Metals out and buy something else. I'm liking, although I have to say, instead of Workhorse, I like the Lordstown Motors better, because it sounds like the CEO there, it sounds like Lordstown's truck and Workhorse truck is the exact same truck, essentially, but Lordstown has the production facility. And I don't know what all's going on with GM there, but there's something going on.
Yeah.
And no, I don't own any Nikola, never bought any, although Stefan, Stefan, Zach, he went in saying he spent like $10,000 on these, really cheap puts. And he was thinking, oh man, I'm going to make $500,000 if it falls down to $10 or something like that. And of course, now it's stuck and going back up, and it probably will go up. I think that doggone Trevor Milton got an advance notice from Hindenburg and then was warned, and he went and gave away the farm to GM just to solidify that there was some value there so that the whole thing didn't tank. So Milton might go to jail, but I think Nikola's going to survive. So I think that covers everything. So ChargePoint, Giga, Battery Day, and rags to riches by doing calls. So I'm trading calls, man, and it's working great, but it's hard to do, and you've got to get out at the right time. You can lose your butt doing them, but you can make a ton of money doing them too. And the safest way are to do just long term. So it's same as stock price averaging, but you'll get about 2 or 3 times on your money.
So Ross, really interesting to me that when you first did the funny money and you kind of learned that your initial strategy was wrong, it didn't work. You were betting that people would see the value of, say, Battery Day, and it didn't. And now you're saying something
Autonomy Day.
Autonomy Day. And now you're saying something that sounds kind of similar, which is like you're saying, I think Battery Day is going to boost the stock, but to be careful, and this is the point I don't want people to miss, you're also being careful because you're saying, if I'm wrong, I'm going to sell some stuff on Battery Day itself before the announcement comes out. In case I'm wrong, you're hedging your bet. Can you just explain that strategy a little bit more in depth?
Yeah. So yes. So I am. Do you have a question? Ari's here. He's wanting to hear, and I've got the headphones in. See if but can you hear me now?
Yep.
You can still hear me. Okay.
Yep.
So, and Ari, can you hear?
Ari needs some stock tips, Yeah.
Okay.
Hey, Ari. Good to see you.
Okay, so yes, I'm. Here's the thing: short-term calls cost way less than long-term calls. So where the September 22 calls, I mean, when I bought them before the split, it cost $80,000 per call, which would be 100 shares. So that'd be $800 a share instead of the $1,600 that it was trading at. So whereas it might cost $5,000, like on Monday, if you buy calls for Friday, this coming Monday, it'll cost maybe $5,000 per call, and it has to go up however many dollars. I always buy at the money, by the way. I don't buy way out of the money or way in the money. I buy at the money, and then over time, my calls wind up being way in the money. Like my June 2021 calls, I bought back in April, and they are now up something like 900%. And I just have them sitting there. As the stock price goes up and down, it doesn't matter. It goes from being up 800% to being up 400%. So when I say I lost 170,000 in a day, so I can look at it that way. But the other way I can look at it is my portfolio was worth 350,000. I'd already pulled out 100, and I started with 80. So it's up 500%, after crashing by all that amount. But the thing that you can do is when there's a point in time where you think it's going to go up, like Battery Day, like I will probably buy more call options Monday morning for that coming Friday, just because they're so cheap. And if the stock price pops on Tuesday and Wednesday, because I think it's going to go up a bunch on Monday and Tuesday. So buying them Monday morning is the cheapest time that you can buy them. And then you could just turn around and sell them again Wednesday afternoon, and I'm sure make a bunch of money, probably just about double your money in those 2 days, whatever you want to risk. But then some of it, I'll leave it in there until Wednesday, because I think, on Autonomy Day, the public didn't get it. But I think part of what Battery Day is going to be about is that great big honking battery, and people understand big. They may not understand what the damn thing is. They may not the big thing. I'm seriously concerned about the tabless connection, because I used to design insulation displacement connectors for electronic interconnect. And it's why I've been concerned about the solar roof, because making connections that hold up, especially on a car under vibration and rattling and thermal cycling and all of that, is just insanely difficult. It's really hard. And what has been done on that particular battery patent, the tabless connector, that picture that came out a while ago, which Elon said was of the ends of that connector jelly roll. And what's going on there is that the end of that foil is the spring contact making a mechanical connection with the can at the end. And so that mechanical spring connection needs to remain intact over thousands of miles of vibration of those batteries being vertical, because if they vibrate and crush and settle, they could lose contact with the caps. And so I'm concerned about it in the long run. But as for Wednesday, I think, people just get a big hammer, a big battery, a big whatever, and they're going to go, oh my God, they've got the biggest batteries in town. Therefore, the price should go up. And it's going to be completely stupid, but for the exact opposite reason of Autonomy Day. And so I suspect it's gonna jump and go up a whole bunch on that day. And my account, my portfolio leveraged the way it is. I have a small amount of stock. It's like I have 10% stock and 90% calls. And so leveraged the way I am, I calculated that if the stock price goes up to 550 from 450, which is very reasonable, that I will make about $200,000 on Wednesday. So, so that's the life of doing calls. It's very much like buying stock, except that things go up and down a lot more. And if you focus on it, if you look, oh my God, I lost 170,000 today, well, you're just going to freak out and you're going to get ulcers and drive yourself nuts. But if you just go with, it goes up and down a whole bunch and your cost averaging in and out, then what's going on is I'm making bets where I'm like an 70 to 80% correct hit rate on when the price is going to go up. I always buy the calls. I might buy them for long term, but I buy them days before I expect something's going to happen. So I buy it days before the earning call, days before the production release for the quarter. So like Q1 production release, it's another date on my calendar. Battery Day is a date, so on and on and on. So I just plot these dates and I buy the calls just before those dates, but then I'll buy them 6 months, 12 months, 18 months out. And I have, shockingly to me, remember, this is somebody who was literally homeless 5 years ago and living in a stupid office space and sneaking into the fitness center to get a shower once a week. And so the idea of making too much money and having to pay, I haven't had to pay taxes in a decade. And I looked on my E-Trade account and it says that my short-term gain this year is $500,000. So I'm going to have to spend a few $100,000 on business stuff in order to get the personal gains reduced. And so I've never really thought of, having to worry about capital gains, long-term capital gains. But now that I do worry about that, I have a huge preference for a September 2022 call because that gives me, I can hold it for a year, and then I have a whole nother year where, you know, if after 1 year, like if you, let's say you bought a call that was 14 months out or 13 months out, you want to hold it for a year. Well, if the stock price happens to be down right at the point in time for any goofy reason that the 12 months go by, you might have to sell it at a loss. But if you get it for a 2 year, then the time constant for the ups and downs for Tesla anyway tend to be around weeks or maybe a couple of months. And so within a 3 month period of time, you can pretty much always pick a local peak or a time to sell, and likewise you can pick local minima for times to buy. So that'd be my advice, would be to definitely do calls, but you've got to be mindful about how and when to do them. Like a friend of mine, I was talking to him, and I said I expected Tesla was going to be profitable on the last earnings call, so I expected the stock price was going to go up. They were profitable and it did go up, but then it slid right back down. And a friend of mine bought some calls that were real short term. I go, well, okay, you know, it's risky. That's the play. And he didn't sell when it was up, and he held on, and then he just about lost everything. It was down to about zero. And it was going down to zero, and there was like, he'd lost $30,000 out of his Roth IRA account, which is completely sucked. I had put 14,000, I never had an IRA, I put 14 into a Roth IRA, and I did essentially the same thing. I lost the whole $14,000 in that account. And so he lost like $30,000 within a couple of weeks. And then there was like 2,000 left. And I said, well, there's no way it's going to come back up. You know, it's going to go to zero if you let it go to expiration next week, because he had bought some calls that were out of the money. That's why I say don't do out of the money. And so he sold it and got the $2,000, you know, and then the next week something insane happened, and the price went way up, and he would have gotten like the $30,000 back, you know. So insane stuff happens. But if you learn about calls, the nice thing is, I mean, especially as far as just learning, if you do long dated calls, you kind of can do no wrong with long dated calls, just like you could do no wrong with stocks, because it's going to go up. And when it does, then that call shows you as being up 200, 300, like, you know, I'm up like 900% on my June 2021 calls, for instance. And, you know, and I won't sell them until after 12 months have gone by, so I could get long-term capital gains next year. So,
Ross, this is super, super helpful. I want to thank you for giving us this, and just the inspiration too. I hope a lot of people are seeing that, like, you know, Ross didn't come at this from 50 years of doing it. He learned it in a short amount of time and is already profiting from it, and that you can try it, and you can paper try it, so that you can, you know, learn it that way first, which is what you did. I think that's super important strategy.
Yeah, agreed. Thanks. And let me just say, as far as you guys and your channel, you know, I like everybody here, I'm watching your channel and Solving the Money Problem, Stephen Mark Ryan and Gally and, you know, Rob Maurer and everybody's channel. You know, there's something that we have going for us right now that has never existed in the entire time of the stock market. I remember as a kid, it's like, if you want to know what the stock price was, you got the newspaper out, and once a day you got the price if you looked it up. And what we have today with all these YouTube channels are a whole bunch of guys like Jack Spencer over in Ireland or wherever he is. And he's watching a bunch of YouTube channels. I'm watching a bunch of YouTube channels. You guys are watching. We are all watching a whole bunch of YouTube channels. And so then, and a lot of us, like Rob Maurer's digging deep, and Gally's digging deep, and you guys do, and I do. And then we're sharing that information amongst ourselves. And we are in, it all seems obvious, just like you were saying earlier, Zach. It seems obvious to us, and we're going to eat up the battery day, I'm sure. And other people are going to be, I mean, I can't believe that people, think Nikola is a good investment. But we have this really, really unusual advantage that you guys and all of the guys researching these stocks are doing more work and better work because it's the only job we have. Our only job is researching battery electric vehicles, whereas Adam Jonas and all these other analysts, they have to analyze 20 different companies, and they're in different fields and whatnot. So they only spend a small amount. And when you listen to them, it's obvious that they don't know basic facts. It's like, what was the guy's name? He was a Fox News reporter. And this was 2 years ago now, or maybe a year ago now. And he said, he's in an interview and he's deriding Tesla. And then the Tesla proponent gets off and he's talking to his inside analyst, deriding Tesla further. And then he says, "What's a gigafactory?" And it was like, I go, what the heck are you doing opening your mouth about Tesla if you don't know what a gigafactory is? And to his credit, I saw just a couple of months ago where he came clean and said, you know what, I was wrong. I thought Tesla was a bunch of crap, and now he's there. Same with Jim Cramer and a whole bunch of people. But we have this amazing opportunity right now in the entire battery electric arena that is just getting going. And all of these SPACs are happening and companies are going. And I encourage everyone, learn how to do calls and do time averaging. If you're not sure, do a long time horizon. If you are sure, try a short time horizon. You'll be right some of the time, wrong some of the time. But the thing is, if you're wrong and it goes down, it tends to go down a little bit and you lose 25% or 50% of your position. If it goes up, you can make 400% on that position. So the upside is a lot bigger than the downside on a lot of plays that you could look at. And, if I'm any clue, I've 12x'd my money in 6 months. So that's, I don't know how people value invest at 10% return per year. It's like, My God, I would never do that.
Yeah.
I've never had money to invest, but damned if I'll ever do that.
Yeah.
I'll be old and gray and senile, and I'll be doing calls, guaranteed.
That's a perfect place to leave it. Thank you so much, Ross. That was really inspiring. I think that you probably inspired me to try that out as well, because I've been a little bit hesitant, but I think you're right. We have more knowledge than most people have, so we should do it. All right. Well, we're going to put this up on our Patreon probably on Tuesday as a full video if you want to go back and watch any part again. Thank you so much for being a part of this with us today. Thank you, Ross. Thank you, my Swiss uncle. I definitely want to hang out with you guys again. We'll be doing it again next month for sure. This is kind of an experiment, but I'm sold.
Totally sold. You? Absolutely. Yeah. I think we might just set up Slack.
Yes.
This is great. So
definitely.
Thank you so much for joining us. Sorry it went so late, but it was packed with good info there. A lot of good info, a lot of fun stuff, and we'll definitely have more conversations, both on the Slack and on here. We'll probably be posting the Slack at some point in the next week or two on Patreon, so just keep your eyes open for that. All right. Bye, everybody.
Thanks,
See you guys.